12 contract types for professional services and when to use them. If you've used BillQuick for a minute, then you're probably familiar with a lot of this, but I'm going to walk through it just in case you aren't, or in case you're new to BillQuick, or in case you never really played around with or thought about the 12 different contract types that are actually built into this product. And the product is built with a lot of intelligence to help you manage these different kinds of contracts very easily. So let's go to the project information screen, and we're going to go as if we're going to create a new project, but really I'm just going to stay on the screen so I can walk you through everything. Now, where you're going to establish the type of project or the type of billing is here where it says type, right? The type of project, which refers to how it's going to be billed. And I strongly encourage you to read the write-up because the write-up's got a lot of detailed information. I'm only going to give you kind of a high-level overview here of what's inside. So the first type of contract is fixed. And notice once I select something, the screen refreshes because some of the information is going to change based on the type of contract we're doing. Now, a fixed fee is pretty straightforward. A fixed contract means the contract is for a fixed amount. It means it doesn't matter how long it takes, how many hours I incur or spend, or what the expenses are. Bottom line, I'm going to contract with my customer for $10,000, and that's what we do to get the job done. Now, why do we still track time and all this? Because we want to compare what it cost us with the contract amount to make sure that we stay profitable, right? Presumably, there's a certain amount of profit built into this, which means there's a certain assumption about how many hours it's going to take to do the job at the various rates that the different people do them at. So, really, really important to think this stuff through. And of course, BillQuick has taken all this into consideration and provided you with the infrastructure to make it easy to track. When you set up a project as a fixed fee and you have then, let's say, billed the full contract amount, and let's say you build it in several different stages, once you hit that full contract amount, on any fixed fee contract type, BillQuick will automatically then create all quote-unquote billable time and turn it into non-billable time because it can no longer be billable if you've hit that ceiling, that contract amount that you've agreed on. So that's a fixed fee. Now, there are several other types of fixed contracts. So we're going to look at those. The next one we want to talk about is hourly not to exceed, which is really fixed fee. All it really means is that we're going to bill by the hour until we hit the ceiling, and then the same stuff applies. Once we hit that ceiling, all the billable time gets converted automatically to non-billable time. Next, we'll take a look at percentage. Percentage is an interesting one. It reminds me of a client I worked with many years ago who was, they were a construction company, but they had a special niche that they served, which was they remodeled homes specifically that had been damaged in fires. And so a lot of their business was based on insurance companies paying them based on a settlement, right? So let's say the insurance company comes in and says, yeah, we're going to give you, the contract that you quoted is for $10,000. We're going to write a settlement check for 75% of that. So you put your 75%. Notice when I changed it to percentage, this field appeared. It still has my contract amount at $10,000. But watch what happens as soon as I complete the entry of the 75%. It's going to update my contract amount to $7,500. So that's all a percentage is. It's just a way of saying, here was the original contract amount, but the insurance company is offering to pay a percentage. We're going to agree to do the work based on that settlement amount, and that's that. So that's percentage. Then we have recurring with cap, right? And that's all here. Recurring with cap is kind of what it sounds like, right? It's really just a fixed fee divided into fixed amounts or even amounts or set amounts. If it's recurring, presumably it's the same amount we bill perhaps every month until we reach the cap. And I probably should get rid of that percentage now. Right, so the bottom line is we're going to set up a recurring billing frequency, let's say based on monthly, right? The recurring billing amount would be $1,000 a month, and obviously at that rate, in 10 months, we're going to hit the cap, and then once again, BillQuick will convert all billable time into non-billable time. That is actually it on the fixed fee contract types. Next, we have hourly, and as I sort of half-jokingly said in the write-up, if I have to explain this, we have a problem. This is just open-ended. I'm just going to bill by the hour. You can put a contract amount in there for reference based on what you think it's going to come to, but an hourly contract means there's no cap. The billable time is never going to get converted to non-billable because what this means, again, is just open-ended billing by the hour, perhaps plus expenses. That is that. Then we get into cost plus percentage. And so cost plus percentage, as you can see here, is based on the percent complete, really, which is based on the cost incurred to date. So if the total contract amount is $1,000, and I gave this example in the write-up, and so far we've incurred $500 in costs, then we're going to bill them that $500 plus, let's say, 10%, if that's the fixed fee percentage, right, is 10%. So we're going to bill them when we've incurred $500 worth of cost. We go to bill them, it's going to tack on the $50 on top of the $500. Really what that means is our fixed fee percentage is 10% of what we think the costs were going to be. If we thought it was going to be $1,000, our profit is basically going to be $100. So that's how that works. It's basically progress billing structured in, and this is just my opinion, of course, just an unnecessarily complicated way. There's much simpler ways to organize your contracts. I'm not sure why somebody would do this. To be honest, I wrote up, kind of my explanation is, in theory, it would be where you feel that the main drivers in terms of the work getting done and the pace at which it gets done are based really on the costs that you incur. Then you have cost plus fixed fee, which works exactly the same way, but instead of a percentage, you're just describing it in terms of a fixed amount. So now it's just a fixed fee instead of a fixed percentage. It ends up being calculated pretty much the same way. So, you get halfway through the job. If the fixed fee on the whole job was going to be $100, then you're going to bill the $50, right? So it's pretty straightforward. Then we have recurring plus hourly. Now this is actually, the name might sound a little strange, but this is very commonly done. When we have like a fixed fee contract, really what this is it's a fixed fee contract that includes up to a certain amount. So it's sort of like we'll do it for $10,000 up to so many hours. Then after that, we're going to bill you an hourly rate of $150 an hour. That's really what this kind of contract means, right? Let's keep going. We have, after that, that's actually most of them. The only really other ones that we have left that I haven't really talked about would be the non-billable ones, the marketing and the overhead. And I love this. This is clever. A lot of times in other accounting software that I've used, we create kind of workarounds for this, or we create a customer or a job for this kind of thing. But here they have a specific type of contract that you can assign. And so marketing is a contract type that's designed for where you might create a project to track the costs that you incur before they become a client, right? When you're taking the client out to dinner or events or whatever it is, when you're wooing that client, trying to get them, or that prospect rather, trying to get them to become a client. This is where you can create a contract. It's not a true contract, but just a cost center, really, where you can track all the costs that you incurred in connection with getting them in as a client, right? The other one, the last one we're going to talk about is overhead, and that's exactly what it sounds like. So a lot of times we just want to track what is the cost of our overhead with regards to money that we spend on things that will never ever be attributable to a job in particular, all your admin stuff that you do, or if you're working on your own internal marketing project, right, where you're doing your own marketing and printing your own brochures, whatever that might be. This is a way of creating a project where the type of it kind of tells you this is a project that we've set up for the specific purpose of tracking anything that's not related to any other job that we're doing, and for that matter, not related to the marketing that we do in connection with actually getting prospects to become clients. That, my friends, is 12 contract types for professional services and when to use them. As always, if you have any questions, concerns, comments, feedback, post them below. Don't forget to subscribe to us on YouTube. And as always, I hope you learned something here and had some fun along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.